o'clock. Should I go ahead and get us
Yep.
rolling? Okay. Welcome back to Liberty and Finance. We're glad to have you all here tonight for this live, really live Ask the Brokers live stream. We want your questions here so that we can answer them. I'm Dunnigan Kaiser. These are my sons, Elijah Johnson and Kaiser Johnson. We're here as licensed bullion dealers and also on a preparedness basis to answer whatever questions you have. Make sure that if you want to submit questions in the live stream over on the right-hand side here, make sure that you are subscribed to our Liberty and Finance YouTube channel, and then you'll be able to enter your questions and we can get them answered for you tonight. So welcome everybody. Thanks for being here. And I see we already have, we wanted to kick off tonight talking about a question that we're asked a lot, and that's about the stability and the safety of the banks right now. A lot of people have worked very hard for a long time and put their savings in the bank as deposits and are under the impression that deposits in the bank belong to them and are there waiting for them, and that they can withdraw them anytime and they can earn interest. All that sort of sounds good, except for the bank law, the Dodd-Frank Act of 2010 that was passed, that actually it codifies into law that the deposits anybody makes in the bank, whether it's in checking or savings or certificates of deposit or even the contents of safe deposit boxes, are no longer our legal property. They're now property of the bank as an unsecured loan to the bank. And that means that if the bank gets into trouble, that those funds can be tapped by the bank for their operations to keep themselves afloat. And in fact, the Dodd-Frank Act of 2010 further states that it is not lawful for the Fed to do what they did back in 2007, 2008, 2009, and that's to bail out the banks from the taxpayers, but instead what's called bail-ins, meaning they can tap those depositors' funds to keep afloat. Big concern for a lot of people on that, and there's lots of questions circling around that, like difficulty getting deposits withdrawn from the bank, difficulty wiring funds out of the bank, and that sort of thing. So any questions you guys have about banking stability, just remember that the FDIC video that we put up several times in the past few months, where there were discussions in their open forum behind closed doors, saying that they expect there to be runs on the bank when times get tough, and that if people do start withdrawing, there would be unintended consequences. So they don't want to talk about that publicly to the ordinary people, but just behind closed doors. So our channel has been about preparedness since 2013. Want to make sure that we take care of our families. So please, any questions you have about safety of deposits in the bank, are good ones to address. And Elijah, I think we had already a question that was related to that.
Yeah, it was about whole life insurance policies, kind of the safety of that compared to bank accounts. And I think we were talking before we hit record, and it seems like, it's a similar situation. I know what the banking system is facing right now is a lot of banks have invested in long-term treasuries. And obviously with interest rates going up, that means the price of the value of bonds falls. So banks are underwater. A lot of banks have assets that are underwater right now. And if people are, requesting their deposits out, requesting money out, then that really puts the banks in a pinch. And that's a major reason why, the four major banks we saw fail in the March-April timeframe. That's one of the main reasons why they failed and were bailed out or were taken over by JP Morgan in the case of First Republic. But it's really, the insurance companies have to invest in something as well. And so a lot of them seem to be in a similar situation. I don't know if you had anything to add to that, though.
Right. Any company that you have deposits with or who owes you some defined benefit, whether it's a mutual fund, whether it's a money market, whether it's an insurance company, whether it's a pension plan, all those companies that or even government entities who are relying on companies that supposedly have investments, they're coming off a 40-year streak that we're all aware of falling interest rates and rising bond value, and that has been a very comfortable environment. And Rick Rule has reminded us an unprecedented environment of falling even to the zero bound of interest rates, et cetera, to make and sustain, even in a demographically challenged environment like we have, where we have a falling birth rate, we have more retiring people than we have new earners to support them, et cetera. So a lot of those demographics and other mathematical challenges have been able to be overcome because of the low interest rate regime that we've been in from a bond standpoint, that's been favoring the banks and the insurance companies and the mutual funds and so on and so on, pension plans. Those days are over for now. And so the next 40 years do not look like the last 40 years. In fact, even the next 10 years or 5 years don't look like the last 40 years. And former bank director Alistair McLeod reminds us, as you talked about, that most banks have not only like a 10-to-1 leverage, but some have 16-to-1, 20-to-1 or more in the US, and in Europe, sometimes 30 or more to 1, meaning that if depositors pull out $1 or $1,000, I mean, the bank has to make up on their balance sheet 10 to 20 to 30 times that amount, sometimes by selling bonds, which they can no longer skate along and get away with what the Fed has been letting them do, and that is marked to coupon to maturity, rather than saying, what's it worth today? If you have to sell it today and it's not worth as much, sometimes they're down by 30 or 40 or 50% from where the banks bought them. So banks are far from being out of the woods, according to those experts that we interview on our channel. So please, people, be very, very careful about the amount of deposits you have in banks. And some depositors in those banks that went belly up in first quarter had far beyond the FDIC insured limit, and Yellen and company stepped in and didn't follow the law, didn't follow the law that had been passed, the Dodd-Frank Act of 2010, instead bailed those people out far beyond the FDIC insured limit. But she replied to the congressman from Oklahoma that they will not do that unless they see systemic risk, which shouldn't make any of us feel more comfortable, either if we're in a non-systemically important bank, which means they wouldn't even bother to do what they did for those who were in those, but also because that means that they really did believe that there was systemic risk to the entire banking system and that they had to do it. So a couple of reasons for less confidence there. And just go ahead.
Did you I was just on that in that time frame in the first quarter when we saw those bank failures and stuff, and Janet Yellen was making explanations, and she said, this is for sure not the end of this. We're going to, we need to make more things too big to fail, essentially. And that is, I guess that is what it is, but it's an interesting line to take, and one that, again, isn't necessarily, what's the opposite of disconcerting? Concerning towards the systemic health of the banking system. So
one thing, the viewer, A Beautiful Life, great name, has a question here, and they want us to speak about veterans benefits and social security. Will they exist in the future? And I think that ties into something that I was going to mention. That seems to be, it's pretty complicated what is happening in the banking system right now, and we can maybe get caught in the complicated language sometimes, and the big picture is what I like to look at sometimes. And what I see when it comes to Social Security, you mentioned veterans benefits, it's all within the system, right? And the bank accounts we have, or the insurance companies, it's all dollar denominated assets, right? And during the banking crisis, what I really wanted to go back to is the big picture. Does it matter if Yellen and company are going to bail out people with more than $250,000 in the banking system if their bank goes under? Does it really matter? Because if the banking system collapse, then what would the value of the dollar be? And right now we're seeing inflation. We're seeing the value of those assets, the value of those benefits decrease because of inflation. So your money in the bank is already being confiscated because of inflation,
and
so
has been every year since 1913.
Yeah, exactly.
Yeah, when we talk to John Williams from shadowstats.com, he talks about the official stats that they give us, whether they say 6%, 9%, or now 3% inflation. He says they're running about 6% hotter or 7% hotter than what they say. So it was going like 13 to 15, and maybe now we're at 9 or 10% inflation. The statistics just came out from the Congressional Budget Office that premiums for certain forms of medical insurance and so on through the Affordable Care Act are going up by 42% this year. So put that in your one half of your brain, the other half of your brain, put the 3% number that the feds are floating out there, and you realize why Social Security recipients are getting squeezed and squeezed and squeezed, because they're just not being able to keep up with the true currency value destruction that's going on. So a buck ain't worth what it used to be, and we're just going to see more of that ahead.
Right. And we had a question from Anne. What is the percentage of someone's portfolio you should have in gold and silver? And I think it has to do with how much risk do you want to take? You flip that question around. How much of your portfolio do you want to have outside of precious metals? How much do you want to have in the system that is based on dollar denominated assets and the dollar is being inflated away? So I think it's important to kind of flip that question around. How much of your portfolio do you want out of the safest possible asset you could possibly have that has never gone to zero in 6,000 years? So that's kind of the way that I think about this. And all these banking issues, it's like, they can change the rules at any time. They didn't, Yellen and company didn't abide by that $250,000 rule. They changed the rules, right? And people ask about confiscation of gold and silver and all of that. I think the thing is that they can change the rules at any time, and the best we can do is the best we can do. And it's been it's tried and true, right? Precious metals for 6,000 years have never gone to zero. So I think it's important to ask yourself, how much do you want outside of the safest asset that there possibly is?
Yeah, and I was going to mention, if you want to put some teeth behind that kind of summary statement, the Ibbotson study that is included in a free report that we can send you guys. Just if you want to email us and just put the word report in the title of your email, we'll send you a link to a short PDF document that we created called The Golden Guide to Investing in Precious Metals. And there's a link in there to a study that was done by the Ibbotson and Associates recently, following the last global financial collapse of 2008, 2009, where they compared the risk to reward performance of the Dow versus and real estate and bonds versus precious metals in the long view. And they showed and calculated and recommended a percentage of precious metals that could be optimal for in a theoretical basis for protecting your portfolio. But as Elijah mentioned, it largely depends on the risk profile that you're comfortable with, as far as how much of your nest egg you want to have exposed to dollar inflation and currency destruction, banking risk, systemic risk, etc. You were going to say?
No, you covered where I was going with. So yeah.
Okay, yeah. So just if you want to email us, sorry, I didn't mention where. Liberty and Finance. That's all spelled out. Liberty and Finance at protonmail.com. If you email us at libertyandfinance@protonmail.com and just put the word report in the title of the email, we'll send you a link to that report, including the Ibbotson study that you can take a look at as far as comparative risk of different asset classes, including precious metals.
Right, definitely. And we have a continued question from Joe about what percentage, how much in ounces should the average American have? I think, again, this is a question that you'll have to answer yourself. And I remember interviewing, he was the founder of metals.daily.com. And he made a really interesting point, is that if you think the dollar collapse, right, is a 10% chance of happening, has a 10% chance of happening, then have 10% of your assets in precious metals. Do it that way. If you think it's 20%, if you think it's 90%, have 90% of your assets in precious metals. So I think some of these things might seem hard to believe because we have normalcy bias. We haven't witnessed a dollar collapse. Maybe if you lived in Venezuela or Zimbabwe, you have in your lifetime. But and I've known people who have experience of that. But if you haven't experienced it, it may be hard to believe that we could see a currency crisis. But think about what is the chance of that happening, and maybe think of that as the percentage of your assets you should have in metals.
And another person that I talked to, who Maurice Jackson, who he's a smart guy, and he said, look, for most of history, 1 ounce of silver has been a day's wage, and so whatever is an appropriate emergency fund for you when it comes to that amount of money for your family, That's a great place to start.
How much of a hard cash cushion do you want to have?
Right.
Yeah.
Right. If you have a currency crisis, if you have something where dollar denominated assets are worth a lot less, how much of a hard assets do you want? It's a good place to start in thinking about it as 1 ounce of silver equals 1 day's wage.
Yeah, and that's another reason. Why do we have the expression cold hard cash? It certainly isn't paper we're talking about. But if you want to know how much cold hard cash you should keep on hand, another way to look at it is how many weeks, months, or years would you like to be able to carry on your household? You know better than anybody else what your household expenses are for food, fuel, rent, or mortgage, repairs, services, rides, parts, things that you need just to keep your household going. And you can ask yourself, do you want a 1 month, 3 months, 6 month, 12 month, whatever cushion in cold hard cash to be able to carry on your life if there were a major disruption to the banking system or the dollar or the credit markets, et cetera, any of those things.
Definitely. And one topic we were thinking of discussing before we came on was that gold is above 2000 again. It closed the week above 2000. So that's something that seems definitely significant as we're back above that level. A lot of guests I've been having on is saying that gold could be heading up for a new run here. I don't know if that's what you guys have been hearing or any perspective on that, kind of the sentiment maybe we're seeing from clients buying metals right now.
Yeah, it's interesting because I think we're seeing kind of two camps in my view. One is those who've been watching the long term and seeing the triple top that gold has formed over the past decades, and now poised to do a breakout of that triple top. And if it does, they're saying then it could easily run at 10 or 15%. That's typical. That would take it to like 2,200 or 2,300 in short order. So that's one thing that people want to make sure that they're at least positioned ahead of that. And as Andy Schectman reminds us, it doesn't have to be like all or nothing. You don't have to shoot make your whole move, whatever that strategic percentage is that you decide for yourself is the right move. You don't have to make it in one step. If you break it up maybe into like 3 steps and take that first step, so at least you're not caught without anything. I think of it, the analogy is if you're going on a boat voyage, a journey that might have some risk to it, you don't just wait and buy all your life preservers when they go on sale. You want to make sure you've got enough. And then if it will go on sale, maybe you get some more, that kind of thing. But the other thing I was going to mention that correlates with that is when you're deciding what's the right amount for your family, it's a personal decision. It's one that has, and I know that both Andy Schectman and others talk about selling stock down to the sleeping point so that you can rest at ease at night and making sure that you've got enough coverage in hard assets because from many of the experts that we've interviewed on our channel, the next decade or more looks like it's going to be characterized by an emphasis on commodities and hard assets. And that's certainly what we're seeing the BRICS plus nations turning towards, in contrast to the Western nations, which are just doubling down on this idea of you'll own nothing and be happy, and we're going to be in debt forever, and their children won't be able to pay it off, but don't worry, they can work forever and not own anything. It's like, if that's the future that you would like to not choose for your family, then the rest of the world that kind of sometimes shows more common sense than some of the stuff that's been coming out of the West recently is focusing on owning real things.
We have a question here about vault storage from Brian. I don't know if Kaiser, you wanted to answer that question.
Sure. So, there are lots of options for vault storage. We have a handful of ones that are. We have a specific program with Brinks. It's a flat rate storage option that we have that is. It's a unique program we have, and you can also email us at libertyandfinance@protonmail.com. Again, libertyandfinance@protonmail.com. We can send you over information both about our Brinks storage plan, and then we have a strong relationship with Dakota Depository, which is the depository that is co-located with one of our main bullion exchanges. And so both of those are really strong options that we can help you with. But one as far as that you won't find pretty much anywhere else is the flat rate storage plan that we have with Brinks, which is a special program that Miles Franklin has and nobody else has. So and it works across both storage here in the United States and in Canada. So
yeah, and I wanted to mention about storage. That's another question we get a lot from people who are just getting started is, should I take personal delivery of my metals or should I put them in storage? And I'll just reflect after many, many people have thought it through. About 95% of our clients have us ship the metals directly to them because they would prefer to have it held in their hand and protected themselves and keep it completely private and completely personal and close to them so that they know where it is and there's no counterparty standing between them and their cold hard cash. Then some of those people who have been accumulating for a period of time eventually reach a point where they no longer want to be the sole protector of all of their nest egg, and they want to diversify that and spread out the risk by putting some of it into professional vault storage, so that if they go on vacation or if something bad happened, natural disaster, or heaven forbid someone breaking in or whatever, they wouldn't be the only ones protecting their stuff, but they could pay some people to protect some of their stuff somewhere else. So that sometimes is a hybrid that eventually people reach. Or some people who live in very small apartments in very crowded cities, they don't feel safe about where they live, or they're about to move, or there's some other reason why they just don't want to have their valuable treasure with them at that point in their life. Go ahead and start right off the bat holding stuff in the vault. And another reason some people hold stuff in the vault right off the bat is if they're, for example, selling a home and they're going to be like in between situations for 1 year or 2 years, they're not exactly sure, but they want to have that liquidity readily available to them. So they're anticipating that maybe at some point, 3, 6, 9, 18 months down the road, they're going to want to say, hey, I want to liquidate that back in because I want to make a big deposit on either purchase of a property or purchase of a business or whatever. Then that's another way to ease and streamline that process. Is if there's metals held in the vault, then it's usually much quicker. You don't have to package them up and pay for insured shipping to get them back in before you can liquidate that and turn that back into currency that you can use for transactions.
Yeah, or if you're looking to do a swap of precious metals, if you're, for instance, you've got numismatics and you're interested in switching them for regular bullion, or you've got silver to gold, gold to silver, that kind of thing. It's easier to just say, hey, move my metals down the hall, please, rather than going, hang on, I got to box up, $200,000 worth of metals and ship that registered mail to you. Yeah. So it's a little bit more efficient that way.
Definitely. We had a viewer here, and some people, I think I really agree with this sentiment here. If you don't hold it, you don't own it. I think really a lot of the considerations that we've talked to, everyone has to make their own decision. And that I think if you don't hold it, you don't own it. I think the interesting thing about that is, yes, you are always involving a third party when you involve storage. When it comes to the storage that we offer, it's segregated and audited
and allocated.
So essentially what that means is your metal is in your spot. It's the exact same metal that you put in that you could request delivery.
It's your physical property. Exactly. It's your legal property. You have legal title to those specific objects. It's just the way you would do it if you designed the system. You'd say, exactly, I'm paying you to guard my stuff. Nobody else gets to touch my stuff. You don't get to give it to anybody else. You don't get to lend it to us. You don't get to mix with anybody else. It's my stuff. And when I ask for it, I want it back. And that's how it works.
Right. And it is these are non-financial institutions, so they're not bound by
non-banking institutions, private.
And they it is unlike places that do pooled storage or things like commingled, where with this storage, segregated, allocated storage, you you could go deposit it yourself and make some kind of a mark on the box or a mark on the coin and get it back out, and it would be exactly the exact same coin, not just, oh, you put in an American Eagle, you'll get out an American Eagle, or you put in an American Eagle, you'll get out one ounce of gold. It's nothing like that. It is actually the exact ones that you've put in.
Yeah, that's what Andy Schechtman calls being penny wise and pound foolish, is the people who say, well, I can get a cheaper storage rate by going with this big name company that stores it for a fraction of, because even the storage that we're recommending, which is allocated, segregated, and audited, costs a fraction of a percent per year to have someone else vault and guard your stuff for you. But there are ones that are cheaper than that are a very small, tiny fraction of a percent per year. However, those are often commingled, and some even IRA custodians even will only allow, for example, silver to be in commingled accounts. It's fraught with peril if you allow your assets to be commingled with others, because you might get back something that's considered functionally equivalent, but it's not the same stuff you put in, and the condition can be different, and who knows what.
I mean, I know Andy talked about one of these kind of false scandals that happened and stuff like that, where people were getting stuff, but they put in gold eagles and they were getting stuff back in gold wire, just
ounces.
Yeah.
So that's probably an extreme example, but
yeah,
there are others that are similar to that. So you want to make sure your stuff is yours. Make sure that whoever you vault it with, you get allocated, segregated, and audited storage.
And I guess mentioning precious metals and the options there with respect to storage. Also, obviously, the main question that people have is, what products do you guys have? And I thought maybe we'd share this. It's a special that we have only through Cyber Monday. So it's very, very low premiums this week. So we have the 10th ounce gold eagles at 32 over melt. So you take the spot price of gold, divide by 10, and then add the 32, and you get the price of the coin. So right now with a roughly, $232, if the spot price is 2,000. Then you have the random design 10 ounce bars, lowest premium possible here, 149 over spot. So 4 bar minimum there. 5 ounce Nordic Mint silver bars at 199 over spot here, actually made by our operations here. So that's nice. And then also probably maybe the best value here would be the 1 ounce silver Britannia, because it's obviously a small size government mint, so very well respected. 269 over spot, which is pretty much the lowest premium I've seen in a while, at least one of the lowest premiums on 1 ounce coins. 50 coin minimum, so that's 2 tubes, a really great way to start there. But yeah, I mean, I would say my favorite out of a lot of the coins minted, the Britannia is really up there, along with I love the Perth Mint as well, the Australian one. But the Britannia is just really beautiful.
Yeah, at least one side of the coin is gorgeous.
and just to point out to people who that functionally the from a statistic standpoint, the specs on the Britannia is identical to the specs on the American Silver Eagle there.
Right.
1 troy ounce of 3/9 fine pure silver, government minted, legal tender status, and face value marking. So all of those specs are identical to the U.S. Silver Eagle. The difference is it's made in Britain rather than made in the USA. So if you're a USA citizen, it's understandable to have a preference for the USA. That's why premiums, because a lot of people feel that way, premiums are higher on the U.S. Eagle. Like right now, it's 269 over spot for the special, and Britannia is 575 over spot for the American Silver Eagle. So that's the preferential difference, the supply and demand availability that makes the Eagle run higher. But it cuts both ways. When it's more to buy, it's more when you sell it back as well.
Exactly. And maybe kind of another consideration here is the 2 different kinds of products. So you're looking at the smaller coins, the 10th ounce gold eagles, 1 ounce silver Britannias. Good for you if you want something really well trusted. You're gonna want to, if you want to have something that you might want to trade with in the future. Some people are concerned about currency crisis. Those are great options because they're recognized and there's small value there in comparison. But then you have the 10 ounce bars more for probably long-term wealth storage, and the 5 ounce bars as well, paying a lower premium there.
Yeah, and when you look at round trip strategies, such as we mentioned, if people are selling a home right now, or they're getting an inheritance, or they're cashing out of a retirement plan or something like that, and they just want to have a metal as a bridge to what comes next in their life, or what comes next in all of our financial lives, then bars, especially low premium bars, can be a more efficient round trip from a commission standpoint, a premium standpoint, to buy them. And then when you sell them, the premium difference is much smaller on low premium items than it is on higher premium items. So something to think about if you're looking at a round trip strategy like that.
Exactly. Yeah, let's check what I think the chat is kind of booming here. We'll see if there's any other viewers' questions here. But I mean, as for that question of, what to buy and everything, I think that's a very important thing to consider is, why are you purchasing metals? Again, yeah, if it's really just a round trip, you're putting it there for a little bit and you're looking to sell in the future, the lower premium items are typically the way to go, because that spread is lower there.
We have 2 specific questions. Let's make sure we address those. Rob B, we mentioned the Britannias being a government minted coin from one of the only 6 government mints in the free world that produce high volume gold and silver bullion. we said was well respected. Rob B says, well respected by whom? So that's the idea, Rob, is that with government minted coins from the US, Canada, Britain, Austria, Australia, and South Africa, those are the 6 largest mints in the free world. The idea is people know that there's one source. Whereas let's say you buy silver buffalo rounds, they're extremely popular. They're typically much lower premium than coins because they're just rounds, but they can be made by any private mint. There's not a copyrighted design, so there can be ambiguity on what's the exact source of it. So if we're entering an era of reduced trust, and many people believe that that's going to be what we're entering for the next period of years, then anything you can do to reduce question marks in the mind of the person you're potentially going to be trading with is to your benefit. And yes, Britannias are less recognized in the US than made in USA coins from the US Mint. That's why they carry a lower premium in the US, but more respected than many generic rounds or bars that people may not be familiar with the source of where they came from. And there was a related question right after that one. It said,
it was, well, one was about shipping. So what is the shipping time frame on these products? As of the last time I checked, these are all readily available. We have them in our warehouse.
Yeah, when we run a special,
yeah.
we make sure we have a good supply of them ready to go. But they are the special will run out when the supply runs out. But just feel free to email us, text us, or call us to check on availability, make sure we've got enough to cover what your needs are. I see what it was. The question was about legal tender. Question where Rolf Steiner said Britannia's are legal tender. They are in Britain. In each of these, that's what Bill Holter refers to as coins of the realm. Whatever he recommends, that wherever you live in the world, you should make sure that the first thing you acquire is coins of your own country, and then go ahead and do value shopping with coins from other countries or bars or whatever. But make sure you have some coins of the realm, meaning that is going to be the most sought after, the most recognized, and the most trusted thing in your country is going to be coins from the government in your country. So that's the difference there.
There's also the thought of Bill Holter and other experts that they would be less likely to be confiscated. The reasoning there is that if your government sells you something, then they're probably not going to be requesting it back. But some people obviously would not agree with that. But
yeah, well, it's a very difficult thing.
No one knows.
We've all been through, haven't we? The last 3.5 years, many things we thought would never happen in the U.S. of A. Or you could roll it back to the Patriot Act. You could roll it back to farther yet. There's a lot of things that have happened, come out of our government, out of Washington, that people didn't see coming. So yes, and you mentioned that earlier when you said, the FDIC or the Fed can change the rules, or the COMEX can change the rules, and so we're all trying to do our best, the best that we can, to reduce risk and improve our families' chances of doing well going forward in an environment which is admittedly, in some ways, hostile to our well-being and our thriving. So that's the best. We're trying to help each other right here. That's what we're trying to do. And
yeah, just to also answer the question about shipping, whenever we run a special, it's almost always we have those in stock. They're not back ordered in any way, and you can always ask that when you're ordering from us, what's the time frame. We'll always tell you as well, is it something that's coming in, or do we have it right away? The time frame on that, depending on payment method, definitely within a week if you're paying by wire, about 2 weeks ACH check for that. So that's typically the time frame, and that's the
fastest, the method of payment drives the delivery schedule, and wire is the fastest settling method of payment together with cryptocurrency. And then the other methods of payment, whether a priority mailed check or ACH, which is electronic check, or money order, all of those have about a 2-week shipping timeline rather than about a 3 to 5 business day shipping timeline with wire payment.
Yeah, and if you want to get metals, this, at least from my experience of being a broker, is a fantastic time to do it based on market premium, and also just the lag time, because we've had times where I was telling clients, 4 weeks before we can even ship anything, regardless of payment method. That was back in the March, April timeframe. Premiums are down now, and availability is back. So you can't give financial advice, but that's the data that I have. It seems like a great time, so that you're getting the product on time and you're not having to wait.
Well, we've been through it. I mean, it's not necessarily financial advice. It's practical situational status of the bullion, the retail bullion environment that we're in right now. We've been through a bit of a convulsive cycle through the COVID years, where there was a rush out of a lot of people's concern about instability in the currency, instability in our markets, instability in our economies, et cetera, to get out of the banks and into something solid assets. And because so many people were trying to crowd in at the same time, even though it was only a fraction of a percent of the population, approximately less than 0.5% of the population, according to Rick Rule, it was still very difficult. Some of you remember having to wait 4, 6, or 8 weeks to get your deliveries, and or even wait hours and hours for a broker to call you back, that sort of thing. So you don't want to wait to make your first move until all your neighbors have figured this out and they're talking about it on the nightly news or whatever. You want to start that first step while it's still plenty of product available, comparatively low premiums compared to what we've seen for the last 3.5 years. It seems to be, and with spot prices of the metals starting to move upward, it seems like we've been in a sweet spot here, and maybe that'll last a little bit longer, but nobody knows how much.
Are you guys in Canada? mfbullion.ca. We have a partner there. So it's MF as in Miles Franklin, BULLION.ca. You can do everything online right there.
Yeah, that's our best option right now for our Canadian friends, is because you can pay in Canadian dollars. You don't have to pay for international shipping. You don't have to send your international wire fees, that sort of thing. You don't have to pay excise taxes as it comes across the border. So it's the best way to get what you need quickly.
Yeah, it
living
saves
in
you a
Canada.
lot of money and saves you a lot of time. You can help us by, when it says on there, hey, how did you hear about us? Say Liberty and Finance.
Yep.
So
you have a couple of questions here about kind of, a lot of people wonder this when you receive the metals. How do you handle the metals to be able to sell them back at the best value, right? Keep them in good condition. Does it matter if you break the seal, right? So if you get a tube, sometimes there'll be a seal on there with some tape on it, and you can break it. That doesn't reduce the value. And also, if you have like a monster box and there's the seal on there as well, if you cut it, you want to check out to see that the coins are there and everything, that doesn't reduce the value at all. It is a lot easier when you're selling back if it's already a strapped case, because we don't have to check every coin or whatever. But it doesn't reduce the value as of now. We can purchase it back at the same time. Really, the only thing that would reduce the value is if the coins were damaged in some way, if they're scuffed up, tarnished, typically not, but yeah, really just if the coins themselves are tarnished. So I would recommend wear gloves or something if you're actually going to handle the coins. But yeah, really breaking the seal or cutting the strap doesn't reduce the value. It's just a lot easier if the seal is still on there.
Well, yeah, because I mean, it's the coins that we're selling are in brilliant uncirculated condition, and most of the time, unless you have specific ones that are in a graded condition or something like that. And even if you've touched them or you've opened them and that kind of thing, that's not changing whether they're in brilliant uncirculated condition or not. They're still uncirculated, they haven't been scuffed or scratched or that kind of thing. So it's usually actual marring of the surface and stuff that changes that, or if you handle them enough that your oil started to degrade them, which would be pretty tough to do with a precious metal. But you can use common sense about it, and yeah, not worry.
In fact, if you call us up and say, hey, I would like to sell you 500 American Silver Eagles, we won't even ask, are they in a sealed monster box? We'll ask, are they in brilliant uncirculated condition? Right. So there's a question here, and it correlates to a question that was asked earlier. Ralph Steiner says, is an Israeli silver shekel legal tender in the USA? So the only coins that are legal tender in the USA came from the US Mint. So that's either dimes, quarters, half dollars, or dollar coins, or the 1 ounce American Silver Eagles, or the various fractional and full ounce American Gold Eagles. That's it. So coins from the U.S. Mint that say right on there
do have a face value.
They say $1 or $50 or $10, whatever they say on the face of them. That is legal tender coinage in the U.S. Any foreign minted coins are legal tender in those countries, but they still carry somewhat of a preference over to most bullion people in the US rather than just generic rounds or bars, because there's a single known source. So That's the answer. It's not legal tender in the U.S. The Britannias are not legal tender in the U.S. They are in Britain. The Israeli shekels are not in the U.S., but they are in Israel. So wherever you live, at least make sure that you have some of the legal tender coins of your country, the coins of the realm, before you start value shopping and buying the least expensive stuff that you can, if that's what you want to do. So we've just got a couple more minutes here. So before we wrap, John says, my 90-plus-year-old coins purchased at Miles Franklin look new. A lot of people have a very strong affinity for what's called old gold or old silver, and there are remarkably good condition coins available. Right behind me. Nope, dang, it's not right. Nope, it's my old office. I gotta get the thing mounted up that we got from Miles Franklin. But anyway, there are excellent uncirculated or various graded condition coins from pre-1933 in the case of gold, or pre-1965 in the case of silver, that are in remarkably good condition. The price does change as the condition is higher, but they are available, and some are remarkably close in price, not that much different, few percent different from modern bullion coins. So if you have a preference for old gold or old silver, ask us about it when you call, and we can easily check the price for you and provide you with quotes on that, and you can compare if it's worth it to you to pay a few percent more for the old metals, which are sometimes in remarkably good condition.
Yeah, I mean, a lot of when we're a few weeks ago, we had a special on some old gold, and I think those were AU or something like that, which
almost uncirculated,
almost uncirculated, which is just barely the next grade down from brilliant uncirculated, and most of the semi-numismatic old gold coins that we sell and that kind of thing are ones that actually have numeric grades, from NGC or PCGS, third-party grading organizations, and those are 62 to routinely we're selling 62 to 65, which is better even condition than modern bullion coins that you're buying most of the time. And so it's really remarkable what kind of condition these things from 90 years ago, 100 years ago, 140 years ago, the condition that they can be in. So
I think we're gonna get ready to wrap. Did you have any more questions you want to pull off the list?
Yeah, I mean, I think that pretty much covers it all there. I think, when it comes to maybe the general theme again, getting back to where we started with the banks and gold going above 2,000 right now. I mean, I think it's important to consider for yourself, how much risk you want to have in the system, and whatever risk you don't want, whatever you don't want to have at risk, consider having in precious metals or some sort of hard asset really outside of the system right now. But any other last thoughts you two had?
As you compare other hard assets that are outside the system, many people will talk about good farmland, that sort of thing. Excellent type of an asset. One of the challenges there is the liquidity of it, meaning it's not portable, and it's more lengthy in time to subdivide or find the right buyer, that sort of thing. So if you want something that is readily be able to be converted back into currency or used for settling of a transaction, that sort of thing, within a matter of days, that sort of thing, then precious metals are hard to beat as being a hard asset. So happy to answer any additional questions you have. Don't hesitate to email us at libertyandfinance@protonmail.com.
Linked in or email in the description of this video. So you can,
if you look in the description of this video, you'll see a link to our email address, libertyandfinance@protonmail.com. Again, if you want to receive that report from the Ibbotson and Associates about the importance of gold as a risk-reducing hedge to your overall investment portfolio, that's called the Ibbotson study. Just put study or report in the title of your email to us. We'll make sure we get you that. And just thanks everyone for being here. If this helped you answer some of your questions, we're glad. And feel free to share this with friends, family members, coworkers, neighbors, anyone we can reach. It'll help us all. We're trying to reach as many families as possible. Our family obviously has been benefited from being able to be aware of these concerns so that we can help others as well. And we're glad you're all here tonight, joining us in that process of learning together.
Thank you, everyone.
Thank you.
Hey, those guys look familiar.